how do you guys kind of manage? First of all, I mean, you know, it's a really tough call when a company decides to shut down. It's not easy, and people don't make those decisions on a whim, right? But first of all, how do you manage kind of the optics around that? How do you feel like we should be talking about it? And then also, how do we do it in a form of like, because we don't owe explanations for the most part, but how do we be really open and real about some of the things that can happen or have happened already? And I'm curious if anyone wants to dive into that.
Right. So if the surprising thing about Pakistani startup ecosystem for me is actually not enough startups have failed. If you look at the number of startups that have raised, let's say, $1 million or more, there are about, I think, between 80 to 100 startups that have done that. We know that last 18 months have been tough, so a lot of them had done it 2021 or earlier. And like normally what happens is you raise that round and it's to prove that you can build a product, have product market fit, and if you don't, you fail, and it's fine. If you have some money left over, you give it back to investors, or you just wind it down if you spend it all, and then you take some time off and figure out what you want to do next, right? And 30–40% of the startups will figure that out in 2 years. In Pakistan, I think like not even 10% of those startups have failed yet. And I think part of it goes back to this stigma that's associated with failure, just culturally as well. And this was the same in India as well early on. But ecosystems take some time for that to understand, because normally when somebody loses their job or closes their business, parents, society, relatives, like people just don't approve of that and look very negatively at that. This is different. I think we expect the failure is the expected outcome. So part of it is cultural, part of it is the reaction publicly, but I don't worry about like what a certain reporter would say or somebody tweet. I think it's just not worth paying attention to that. What matters is the conversation that you have with the founders through that process, that you have with your investors, LPs, and how you reflect on that. And we had in our portfolio an early failure airlift, and the first thing I told my LPs was the wrong lesson to draw here would be to not back ambitious founders. So one of the big reasons they failed is like they are still the most ambitious team we have backed, like in a portfolio along with Bazaar. Like those are the two who really were going for the moon. And then obviously that comes with the capital dependency that they could not raise and they failed, but that would be the wrong lesson to learn. And the lesson to learn is more in terms of how do you manage that risk, and like what are some of the things you would have differently in terms of maybe internationalizing sooner or maybe doing it later depending on the capital markets. And that's a longer conversation, but I love having that conversation with anyone, but it's a nuanced conversation, so you don't do it on Twitter in 280 characters.
I just want to echo what Aatif said, because, and to your earlier point, Kalsoom, we don't like to see others succeed, and we also don't want ourselves to be associated with failure, right? So this whole notion of kicking the can down the road, these zombie companies just kind of like going on, struggling to raise, and the longer they survive, the harder it is for them to raise, and they can't get the traction to then justify a raise at a higher valuation or at the same valuation before. So coming back to what Kian earlier said, failures occur. We're in this business of taking risk. Some startups are going to fail. Learn your lessons, get on with it, and in that process, make sure that the founders are like also trying to learn the lessons so that they are better equipped for their next ventures. And to be honest, like we don't believe in going back and correcting what a journalist says, etc. Because a lot of it is sensationalist media, right? Like they want to get clicks, they want to stir up things. They will get like random old employees to say things which aren't necessarily true. Now, are you going to spend your time going and correcting everyone? Because you can't make everyone happy. If we want to do that, let's sell ice cream. Let's not take risk and try to build some companies. But also, we don't want to dwell too much on that, right? Because as an ecosystem, like Aatif said, maybe we haven't had enough failures. A lot of companies that are out there probably in the next year are not going to exist or should not really exist. That doesn't mean that those people should be marked with a cross and they should never have another chance in life. It's really like, can you put your effort and that learning to a more effective use? That's the optimizing, which I'm kind of relating to what Kian said earlier. And I don't think we do enough of it. Another thing that we can learn as VCs and as an ecosystem is that we should be sharing those learnings with the broader ecosystem, right? Like rather than again just trying to protect our turf and like trying to justify to a set of LPs like why our decisions are right or wrong. It's about like really collectively growing as an ecosystem, because the early notion that we had of an ecosystem of like competing for like limited number of deals and so on. In reality, in our ecosystem, other than 4 or 5 deals, any one of our funds can invest in any of the deals. Right, so the notion of like how it's competitive, etc., is no longer there. We're not there as an ecosystem. We need to cross so many levels to get to that point where like your portfolios can be different. Right now, it's about creating success stories. Success stories will help retain our talent. Success stories will convince those LPs. Will tell people that okay, in addition to some of the failures, which is an actual function of this asset class, there are now success stories emerging from Pakistan, and it's worth backing because that risk that is being taken is being justified from the returns that are being generated.
Great. Any other last points?
Can I ask the room, investors, who amongst you have lost money, and founders, who's failed? I can bet that moment was an incredible learning experience. It is absolutely necessary. We've all done it. And that is part of an evolution of an ecosystem. That is part of learning and getting better. So let me talk about the investment community. It's called risk capital for a reason. In developed markets, a really good return is a 20% IRR. In places like Pakistan, you can achieve 35% IRR. I don't think my maths is as good as Kiat, but I think that's a 14 to 20x return. And I think when we have conversations with our investors who understand allocation and allocate judiciously to risk capital, they get that. So to your point, Kalsoom, I'm unapologetic with that in that regard when there are failures. But to the family community, and this might sound quite Darwinian, but failure is necessary because it stimulates fast follows and an iteration. That is the very nature of evolution. And to your point, I would like to see that. When I say I would like to see it, I need to see it. We need to see it. And there's nothing wrong with that. I think what is incumbent on us is to make sure, to what you said, Rabeel, that the learnings are widespread. I want to see what the area founders are going to be doing next. I want to see what other company founders who've had to shut shop, they will come back stronger. And to a point that was made on the panel about we're not in an ecosystem where every single VC is competing for deals, where they're pitching and sending room service at 3 AM to the competitor to derail them on pitch. Where it's quite the opposite. We need lots of money, and we need VCs to participate in the same rounds. And I think one of the things I'd say to the international investors, and this is not a shameless plug for the local VCs, is work collaboratively with those on the ground to do good due diligence, understand the sectors, understand the unique icebergs that hit the Pakistan market, and I think we'll grow stronger.
Yeah, I do think that collaboration happens, and I see hands up, and so I do want us to be able to get to questions. But before we do, we're talking about learnings for founders, also learnings for ourselves, right? Like sometimes when I think about, would we have done the same deals had we known what we know, right? Like you learn so much in Fund 1, we're all kind of in that, but a lot of us are transitioning to Fund 2s. A lot of those lessons and learnings are informing the strategy of our second funds. I'm just curious for you guys, how is your strategy different in Fund 2 versus Fund 1? What are the lessons that you're carrying with you that is informing how you guys are thinking about the next fund?
One area in which we're trying to get better is this whole estimation of understanding and sizing a market. We love to say 250 million, maybe it's 300 million, but really how many startups have we had beyond Karachi, Lahore, Islamabad, right? And so when you're thinking about your target market size, and what the capacity for paying within that is, we're trying to get better at it, right? Which is again some learnings across many different spaces from our first fund, and it's just one of those things that we're trying to translate into our better deal selection, more effective investments, and not assuming that the ground reality is going to change. So that's one area that I wanted to share that we're trying to actively be better at.
Awesome. Maybe from Faisal and Naiel, since you guys haven't spoken.
At Fatima Gobi, we want to stay course that we've been executing on. I think it's absolutely essential right now as what we call this, going through this valley of death, to bring in more additional capital, to be able to support these great founders that are executing, and even in these difficult times, being able to get such great performance, because we see that, and what gives us comfort is that we see the underlying current, where we see demand is there, where we see adoption is also taking place. And like Faisal said, going from the offline to the online space, there's such a big delta there that has to be met. So we want to stay on course with what we're doing, and you know, I think it's imperative for all of us to have our second funds up and going. Like we said, it's absolutely collaborative ecosystem right now, and to keep pushing with what we all are doing.
So yeah, so for me, the strategy has been identifying the market gap, focus on returns. So if you fund one with Lakson VC, the strategy was pre-Series A. That was the gap back then. And back then, frankly, pre-Series A was so small in terms of check size. But that $500,000 to $1 million really catapulted some of the companies to become leaders in their particular verticals. When Fund 2 came about for me, when I went out on my own with Zayn VC, at that point, the gap was very different. You basically had a really sharp founders with scaling experience that had worked at Foodpanda, Kareem, and Daraz. And basically, a lot of them left to create companies. I'm talking about like middle management all the way up to like the second layer, senior layer. So at that point, at the early stage, was where the maximum return was. And I still feel that all of us, the founders we backed in 2020 and 21, are some of the best founders probably that are going to be leaders of the ecosystem in 5 to 10 years. And so Fund 3, it's a wait and see. I'm personally a little bit nervous. I think there's a gap in the market of talent, because you have to retool, retrain people that know how to scale. And so there is going to be a bit of saturation. There's too much, when the funds do get raised, I know it seems like a liquidity grid right now, but there'll be too much money sloshing around trying to chase deals. And then that will again create, like, you know, when you're seeing a pre-seed valuation cap of like $10 million in Pakistan, I think it's time to stop investing, right? It's like kind of the peak of, it's like Bitcoin's peak. Pakistan is very correlated to Bitcoin, by the way, in terms of behavior patterns.
As volatile, maybe.
So,
yeah, please.
For us, it's been more of an evolution. So Fund 1 was, you know, about $17 million, very concentrated. We made just 9 investments. That we're going to continue, right? So maybe that 9 becomes 15 in Fund 2. We've already made 7 investments from Fund 2. One thing from a strategy perspective, we are mindful of in this capital constrained environment is have more reserves. So Fund 1, for every dollar we invested as initial check, we had $1 as a reserve. We might up that, it might become 60 or 40, so we are flexible on that. We are pacing, we are keeping the same pacing. So throughout the bubble, like we did 4 to 6 investments a year, 2020, 2021, 2022, 23, that all stays the same. It's very much evolution, 30% larger fund. And one thing, what we have learned is that, you know, we are not smarter than the founders as a whole. The market of ideas is very efficient, right? So you have to really listen to founders in terms of where the opportunity is. They see it with a much greater clarity than any VC could within their area. And so those are our, you know, like guides. And what we're seeing is that I've talked about a lot more horizontal B2B stuff. We're also seeing a lot of internationalization of revenue opportunities. So PESMO is not just building for Pakistan, they're also going to build it for all emerging markets. FarmDAR, which started, you know, it's an agri-tech using AI and satellite maps to improve agri productivity, and started off selling this to sugar mills in Pakistan. But now have a JV in Brazil with an insurance company there, and are selling to, you know, like international companies across the region. So that, I think, is emerging as a big theme. But we're sector agnostic, pretty flexible, and we'll let founders guide our strategy on that.